Hao Hong, good to have you on the program. So where are Chinese shares headed? We had UBS coming out with a pretty strong note predicting gains of 30% for mainland markets. What are your thoughts?
We think that the move yesterday was preemptive. Basically, if you look at the money supply, monetary aggregates, hot money has been flowing out, and also deposit has been transferring out from the banking system. So as a result, it affects the central bank's ability to create base money. But at the same time, this thing only happened early next year. So at this moment in time, the central bank still has the ability to create base money. So the timing of the central bank cutting the triple I by 50 bips, it is a preemptive move. And also, if you look at historically in 2008, actually the last time when we have a large-scale triple R cut was in 2008. And then before that, it was 1999. Now, in 2008, the central bank only started cutting in September 2008 when things were really, really bad. So this time around, we think it is a preemptive
You're trying to say
move.
that the central bank is trying to get ahead of the curve this time around since they learned their lessons post-Lehman's, I guess. Hao Hong, we had Goldman Sachs coming out with a note and really agreeing with HSBC, talking about expectations of an interest rate cut maybe by the first quarter of next year. What are your expectations?
I think first quarter next year would be a crucial period to watch out for. Because by then, the slowdown in global economy will be very visible. So at this point in time, I think the central bank is choosing a very visible move to choose to cut triple R instead of using larger scale open market intervention to inject liquidity. So that is a good sign. So by the time when we get to first quarter next year, I think the central bank would have a lot more latitude to cut interest rate because inflation will be coming down very fast.
Right. I should mention that Goldman Sachs and HSBC not predicting an interest rate cut necessarily in the first quarter, but just for the entire year, which a lot of brokerages are resistant to. So, Hao Hong, why are you recommending financial shares and material producers the most in reaction to the easing of credit now on the mainland?
Yeah, because those are the guys who are more cyclical oriented, and also they are very interest rate sensitive. So when there's a rebound in the market, they're going to bounce the hardest.
They're going to bounce the hardest. Are there any particular names between the financials or the material producers that you want to specifically highlight?
We highlighted in our note yesterday smaller banks, insurance, brokers, materials, and industrial companies. But we didn't give out specific names. But people should be looking for names in these sectors.
Okay, Hao Hong, one more question for you. As I mentioned, UBS going very bullish on basically mainland shares, A shares. Are you going to see a 30% pop this year? Or is that a little over-optimistic in your view?
I think the Asia has its own reason why the bounce yesterday was not as high as the H-share, because Asia we have liquidity problem. We still continually we still have a lot of IPOs in the pipeline. So as a result, it's pulling down back liquidity supply to the domestic market, and as a result, yesterday the Asia didn't bounce as much. And also in terms of the B-share market yesterday, we saw the day before yesterday there was a 6% drop in the B-share market, but then yesterday we only bounced back 2%. There's also some concern about liquidity outflow as well.
Okay, gotcha. Hao Hong, thanks for making time for us. I know it's snowing today in Beijing. Have a great week.